Hello, everyone, and welcome to this week's Wealth Enhancement 7 Market Movers Weekly Market Briefing. My name is Doug Huber. I'm the Deputy Chief Investment Officer here at Wealth Enhancement, and let's dive into this week's key forces, from Fed pivots and GDP revisions to tariffs and earnings announcements, all shaping the U.S. equity and rate markets. The week kicked off with a notable shift in tone from Fed Chair Jerome Powell at the Jackson Hole Summit. First time he was signaling an openness to a potential rate cut as soon as September if the labor market continues to weaken. This was widely well received by U.S. equity markets, sparking a surge in equities and then also driving the rate cut probabilities for September up to 85%. These were much lower earlier in the year. So the markets are now really pricing in that we will see at least one 25 basis point cut from the Fed at the next September meeting. Fact of the matter, though, is there's still lingering political interference as the administration has looked to oust Governor Lisa Cook. And this has put the market a little bit on its back foot as it's worried about where the interference of the administration with monetary policy will follow going forward. On brighter news, we saw the Bureau of Economic Analysis, the BEA, revise their Q2 GDP print. So GDP is how we're growing here from an economic standpoint. That was originally for Q2 projected to be 3%. We've actually revised up to 3.3%, beating expectations thanks to stronger consumer spending and investment. This is a big one. We've talked about it a lot on this, that we really are watching the health of the U.S. consumer. It has really been the engine that has continued this economic cycle on as long as it has gone on. And so it's good to see that consumer spending was actually a surprise to the upside. The markets have responded again, cautiously rallying this week. I think the S&P 500 is up roughly 0.5% through end of day here on Thursday. Tech-focused equities up a little bit more, and we'll touch on that in a little bit. But the strength of that is really from kind of this one-off adjustments and amid these import shifts in the GDP number. And so we're trying to determine, is this a one-time thing or is there some durable momentum here to this growth that we're seeing in the economy? On the tariff front, tariff pressures certainly seem to intensify on a broad scale as the U.S. broadened its 50% steel and aluminum tariffs to encompass another 400 plus products, including furniture and construction goods. The good news, though, is that Canada modified its retaliatory tariffs to mirror those of the U.S. under the USMCA. And so hopefully that will actually ease trade frictions coming across the border to our north. And that could be helpful to maybe bring down some of the pricing as Canada is a big trading partner for us. On the equity side, we did see a big week for earnings. Nvidia reported, JPMorgan, Boeing, others. It's been a strong week in the market. It's certainly tech and AI-oriented stocks that are driving the headlines. But if you look under the hood, we are seeing some more value-oriented names and cyclical sectors also gaining some ground this week. And so what that means to us is we're seeing a market that has some broadening going on. And typically in these late summer months, we don't see as much volume, but it does appear participants are in the markets and certainly being kind of selective of where they're placing their bets. And so that's actually a really good sign that we're seeing broadening in the marketplace. Finally, as it relates to some other kind of markets we're looking at, rates have been roughly stable this week. We saw a little bit of a steepening in the curve as the front end, which is what the Fed has some control over, dropped on those increased expectations that the Fed will drop rates in September. The long end has stayed roughly stable, and so you'll see what we call a steepening of the curve as kind of the front end came down a little bit. Outside of that, the dollar has been remarkably stable this week. We saw it go up a little bit. It's up roughly 0.2% on the week as I think these positive growth dynamics have come forth. You're seeing good earnings out of U.S.-oriented companies. And so dollars gained a little bit this week, certainly off the lows we saw earlier this year. So all positive in that regard. I think, what are we watching, right? We always talk about that. What are things in front of us here? I think labor market continues to show some strain. We did see jobless claims rise to $235,000. And so $235,000. And so I think that is raising some concerns about the resilience of the labor market. That being said, unemployment has continued to hover in the low 4%, which is a very healthy level, especially backed with the growth we're seeing in the economy. Businesses still appear to be continuing to pass those tariff costs to the consumer, which, is that pressing on inflationary pressure? We will see. I think the big question is that inflationary pressure a one-time thing, or do we expect that to be more longer lived? And so we're keeping an eye on that. Looking ahead, we have some big data announcements coming through. We have the PCE inflation reports, where we will see at the end of this week. And so there will be some data in there about exactly how much of the inflation is coming into the consumers' lives. We also have the August job numbers coming soon. And so those will all be important to keep an eye on as we look at both the Fed's dual mandate of inflation and job growth. And so those are two things we obviously pay a lot of attention to as well. I think in summary this week, it's been a positive week for most markets. They're certainly riding a wave of enthusiasm this week, really on the back of Fed dovishness and this upside GDP surprise. But there's continued political turmoil. We know that there's tariff escalations. Those come on and off, and labor softness certainly are all things that could pose a little bit of a risk. And so with that, I hope everybody has a great Labor Day weekend. We'll be back next week to tell you more and give you updates of all the new data we have coming through. Thank you very much. Bye-bye.